Hey everyone, Jon Markee here, your Builder CPA, and today we're talking about uncleared transactions on your bank reconciliation. So let me set up this scenario that you've got going on. Many people go through their routine accounting tasks, printing checks, sending them out, and they don't really track which ones have been cashed. When it comes time to the bank reconciliation, they sit down at their computer, they open up the PDF of their bank statement, they enter the ending balance into QuickBooks for the reconciliation, they enter the ending date of the bank statement, and they see a zero difference, the $0 variance. It looks like it reconciles perfect, right? However, they are potentially ignoring dozens of uncleared transactions. So just because you get to the magic number of 0 on the reconciliation does not mean that you're in the clear. You need to ensure that uncleared transactions on your reconciliation are addressed. And a lot of times I get a new client and I'm horrified to open their bank reconciliation and I'm told, oh yeah, everything reconciles, it's fine, it must be right. And then there's dozens of transactions that stem all the way back to 2 years ago. So uncleared transactions that linger for months or even years indicate all kinds of potential problems. They might have been duplicated. They might get cashed when it's least inconvenient. And these unresolved items are definitely showing up in your financial reports. Even if you are a cash basis company, believe it or not, there's certain types of transactions like journal entries that appear in your books, whether you choose cash or accrual basis accounting when you run your reports. So on one hand, if you've got too many check payments entered that are uncleared, your expenses might be overstated. In the event of an audit, you might be looking at a catch-up tax bill. On the other hand, you might have deposits that are overstated. You might be paying taxes on income that you didn't receive, or a lot of times what happens is people will receive payment of an invoice into undeposited funds, and then they forget that they did that, and they simultaneously go into the bank feed and add the transaction. And then somewhere, somehow, one of those transactions doesn't clear on the reconciliation, but it is in fact reporting into their numbers, and so they could be overpaying on taxes. Even if your company operates on a cash basis, these uncleared transactions definitely still factor into your reports somehow, some way. These transactions can misrepresent your cash flow, your available funds, your overall financial health, and more. So accurate reconciliation requires addressing the uncleared items to ensure that your reports truly reflect your accurate financial situation. And we want to get them cleaned up in a timely manner, because if you've watched some of my other videos, you know that I don't like to do post-close adjustments. And if we close the books by the 10th or the 15th or the 21st, we have a limited amount of time where we can go back and address prior months, especially if we're trying to put a rush on closing year end for a tax return. So ignoring these uncleared transactions are going to create a false sense of accuracy. While the reconciliation might show a difference of 0, the presence of old uncleared items means that there are underlying issues that really need to be resolved. You need to regularly review and clear these transactions. There's a bunch of different strategies on how to actually clear them. A lot of times we can't just go back in time and delete them. A lot of times they're multi-step. So somebody entered a bill, then they printed a check, and if you just delete the check, the bill payment is going to reopen the bill. Then the bill is going to go back into accounts payable. And guess what? You are at risk of double paying a bill from 2 years ago. So that would be pretty miserable. So it's just so important that you look at the uncleared transactions and you address them appropriately by going through all of the different steps to actually clear them off, if that's the conclusion that you've come to. So to avoid potential pitfalls of uncleared transactions, just develop the habit of regularly monitoring and resolving them. Identify why the transaction remained uncleared on the reconciliation, follow up on outstanding checks, see if the vendor needs a new payment. If they're not going to cash it, it's got to get out of the system. Proactive management ensures that your reconciliations are truly accurate and your financial reports are trustworthy. So as always, thanks for watching and have a great day.